How to use the RSI Forex indicator. Relative Strength Index. The Relative Strength Index (RSI), developed by J. Wells Wilder, is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100. How to use RSI in Forex trading. The common levels to pay attention to when trading with the RSI are 70 and 30. An RSI of over 70 is considered overbought. When it below 30 it is considered oversold. Trading based on RSI indicators is often the starting point when considering a trade, and many traders place alerts at the 70 and 30 marks. Best RSI settings for day trading strategies. Short-term intraday traders, day trading, often use lower settings with periods in the range of 9-11. Medium-term swing traders frequently use the default period setting of 14. Longer-term position traders often set it at a higher period, in the range of 20 to 30. How does the RSI indicator work? As you can see, the only tricky thing is the RS calculation, which is defined as average gain, average loss. In other words, the RSI indicator goes up when the average gain is large, or when the average loss is small. Now you might be wondering, how does the value of the average gain goes up? Simple. When the price moves up quickly with little to no pullbacks, your average gain is large because the price is making positive gains, which leads to a higher RSI value. Likewise, when the price tanks quickly with little to no pullbacks, your average loss is large because the price is making negative gains, which leads to a lower RSI value. And finally, the average gain, loss can be manipulated by the RSI settings. For example, if you choose a 14-period RC, then the average gain and loss will be based on the last 14 candles. If you choose a 5-period RC, then the average gain and loss will be based on the last 5 candles. So if you used a lower RSI period settings, the more sensitive the indicator will be to recent price movements, and it's just the opposite for higher RSI period settings. Makes sense? Here's the RSI indicator in action, using the default 14-period RSI. How to use the RSI indicator and improve your winning rate fast. Recall, the RSI indicator measures the average gain to loss over a given period to determine momentum in the markets. For example, if the RSI is above 50, it means that the average gain is greater than the average loss over a given period. And if the RSI is below 50, it means the average gain is lesser than the average loss over a given period. So, how can you use this and improve your winning rate? Simple. Here's how. Adjust the RSI indicator to 200 period so you can identify the average gain to loss over a longer time horizon. If the 200 period RSI is above 50, then the market is likely in an uptrend and you want to look for buying opportunities. If the 200 period RSI is below 50, then the market is likely in a downtrend and you want to look for selling opportunities.